At a time when Trump is coming for our jobs, has the government done enough, do you think, to reverse this break glass emergency, or have things gotten worse since you said that?
So when I read the news, I see that auto manufacturers have relocated investment to the U.S., some big names recently. Housing starts in Toronto specifically are at 30-year low. Bottling companies are also moving operations to the U.S. And of course, small businesses have been heavily impacted because of the U.S. tariffs. Do you believe that our economy is growing at unimaginable speeds, like the Prime Minister has mentioned?
At a what speed?
Unimaginable.
The standard of living of Canadians is what's at stake in the productivity crisis that was a break glass emergency even before the tariff war began.
But do you wish you still had some gold reserves to offset those losses? Because we do not have any gold reserves anymore as of 2016. You can blame a predecessor. You weren't there. So do you wish you still had the gold?
Steve Marin, who was appointed to be on the Fed, he makes the statement that countries like Canada manipulate their exchange rates in order to keep the U.S. dollar down, in order to increase manufacturing in their home, and he calls it dollar manipulation. Would you say the Bank of Canada is involved in any kind of dollar manipulation?
We see that in this new budget, there's an industrial carbon tax that's going to increase. Are those some of the inputs from that? Because it goes into the steel that goes into a home, it goes into the concrete that goes into a home, and it increases the costs. Would you say that as this industrial carbon tax increases, it could impact the cost of a house?
I don't think inflation is the year-over-year change in the consumer price index.
I understand what the inflation is, but would you say that annual deficits and mounting debts contribute to inflation?
Well,
This Guy's Garage. Like and subscribe.
I would like to take a moment to welcome our witnesses and our guests today. We have the Governor of the Bank of Canada, Tiff Macklem, and we have the Deputy Governor of the Bank of Canada, Carolyn Rogers, with us.
Thank you, Chair. Governor, Deputy Governor, thank you for being here. Governor, the bank recently updated its outlook for GDP. It's below 2% now for economic growth. As we've seen, the Prime Minister promised to have the fastest growing economy in the G7. But given this new adjustment that the bank made, do you think the other G7 countries will outpace Canada in economic growth?
Well, certainly I would agree. Our forecast is for very modest growth. Second half of this year, averaging only 0.75%. We do expect it to pick up, but as I indicated in my remarks, this is a structural adjustment, and so that's going to take some time. So yes, I don't have all the G7 forecasts in front of me, but we're not going to be the fastest growing economy in the G7 over the next year.
I would agree with you. Also, Deputy Governor Rogers, you made over a year ago. You made this. You basically alerted everyone here. It was a break glass emergency when it came to our productivity. We've seen around $54 billion in foreign investment leave Canada. Businesses are shutting doors. We see it in some of our ridings. We get those emails from constituents. And at a time when Trump is coming for our jobs, has the government done enough, do you think, to reverse this break glass emergency, or have things gotten worse since you said that?
Well, the speech you're talking about I gave in 2024, so it predated the swerve to protectionism by our U.S. trading partner, our biggest trading partner. So I guess the simplest way to put it is if we had some urgency to fixing our productivity in 2024, we certainly have it now. Like you, we're digesting all of the measures in the budget. We generally agree with the diagnosis that our country's in need of some productive investments. So, on the whole, we think a budget that invests in improving our country's productivity is a good budget. As for the specific measures, those are for you and your colleagues to assess.
In your opinion, though, do you think that we were ready for this tariff war? Would we have been in a better position if we were better prepared?
Well, I think that was one of the points in this speech, is that an economy, that an improvement in our productivity would help buffer our economy from a variety of shocks, and one of them would be a trade shock.
Right. Thank you. Governor, last week you said in your press conference, and I'm just quoting you, what's most concerning is that unless we change things, our standard of living as a country is going to be lower than it otherwise would have been. I'm not sure if you've seen in the budget or not, but in the budget that was released yesterday by the Liberals, they have a line in here that says, if Canada's productivity growth had matched the U.S. from 27 to 2023, the median income of a family with one child would be nearly $11,000 higher. Would you agree with this assessment from the budget?
Well, I can't speak to every number in the budget, but look, broadly speaking, yes, if we'd had U.S. productivity growth, the standard of living of Canadians would be much higher than it is today.
Right. And what do you think are the domestic factors that made you say that are impacting Canadian standard of living today?
Well, what made me say? I mean, there's really two issues here. I mean, we've had a long-standing productivity issue. That's why Senior Deputy Governor sounded the alarm. At that point, we kind of got through COVID. We got inflation down. It was time to get back to some of the longer-term issues, and that one was front and center. A lot has changed in a year, and last week when I said our standard of living was lower, I was really referring to the fact that U.S. tariffs have fundamentally fractured our trade relationship with our biggest trading partner, and unless we do something, that is a big negative structural shock to the Canadian economy. It's going to destroy some capacity. It's going to raise costs. Monetary policy can help smooth that adjustment, but it can't undo the effects of tariffs. But there are if we don't do something about it, our standard of living will be in Canada will be on a permanently lower path. As I intimated in my opening remarks, there are things we can do about it in the country. We need to improve our competitiveness. We need to improve our productivity. We need more investment. Those are the kind of positive structural reforms that could bend the path back up.
When we put this into perspective of an average everyday Canadian, we're seeing today that Canadians are not doing well. We can all agree on that, I believe. Last time, one of your previous visits here, we talked about food bank usage. And food bank usage has doubled since 2019, and more Canadians are visiting a food bank. Can you put that into perspective of how the productivity crisis that we're in right now, when you say standard of living, how does that impact Canadians?
A very brief response, please.
Yeah, it's actually a very important question. We're hearing what you're hearing. Canadians' biggest concern is the cost of living. You ask economists, what's the biggest problem? They'll say it's productivity. It's actually, it's the same thing. And why do I say that? I mean, how are we going to make things more affordable? The way to make things more affordable is we've got to have more income.
Sorry,
to get
Governor,
more income, we need more productivity. If we have more income, everything's more affordable.
I'm going to have to move on.
To continue to finish what you were saying just now on the cost of living issue and how.
I just want. It is a really important point. And look, inflation was high in 2022. Inflation's back down. It's been around 2% for 2 years, but the price level is still higher. It's got a long tail, and Canadians are feeling that. They're feeling this in the cost of living. Our job is to keep inflation about 2%. We're not going to lower the price level. To lower the entire price level would have a very negative effect on the Canadian economy. You'd have to have a big recession. Nobody wants that. So the question is, how do you make things more affordable? Well, you have to grow the top line. We need to, if there's more income, then things are more affordable. So then how do you get more income? Well, you need to be more competitive. You need to be more productive. You need to, businesses need to sell more products. They need to create more jobs. Productivity is what pays higher wages. Those things will, increase incomes and make things more affordable. So, to get back to where, economists call it productivity, Canadians call it cost of living. It's the same thing.
Thank you, Governor. Yes, indeed, and that's an important distinction that one has to make between inflation and which is the change in prices, and the cost of living, which is the level of prices. And as you pointed out, nobody really should be hoping for a drop in prices. If prices decline, generally speaking, that's called deflation, and that's not good. That's not good at all. So the way to improve affordability, to improve the standard of living, is to raise incomes. You raise incomes through greater productivity, so businesses can pay higher salaries. You also mentioned that we are facing a structural adjustment. It's not just a cyclical change, but a structural adjustment brought about by the trade shock, by the unpredictable and unjustified tariffs imposed by the U.S. administration. Perhaps if you could just tell us and take the time that you want, generally speaking, why in 2025, why tariffs are a bad idea?
Yeah, well, look, Canada, in fact, the world, has benefited tremendously by lowering tariffs. You go back to the end of the Second World War. Basically, since then, globally, tariffs, until the last few years, tariffs have been coming down. Trade has been growing actually faster than GDP, and that's been an engine of growth in the economy. And how does that work? Well, it allows each country, each business to specialize in what they do best, and then buy from other countries what other countries do best. You get more economies of scale. There's pretty clear evidence you also get more innovation when you have more trade. Innovation, spurs productivity growth, raises standards of living. The U.S. under President Trump has swerved dramatically towards protectionism. That's raising costs. That's going to actually hurt both our countries, and it's hurting. It's going to weaken growth in countries around the world. But Canada is disproportionately affected. Canada, we are a very open economy. 75% of our trade is with one country, the United States. And, to get back to a previous question, we've talked for a long time about diversifying our trade, but we haven't made much progress. I think, now it's pretty clear that we've got to get a lot more serious about that. But yes, tariffs, from a Canadian perspective, tariffs, they're going to just, right now we have actually very steep tariffs on steel, aluminum, autos, trade restrictions on lumber. The overall tariff rate for Canada is actually still relatively low compared to other countries, about 6%, one of the lowest in the world. But our economy is just so much more integrated with the United States than other countries. So we are being very much affected. And as I said, if we don't do something about it, our economy is going to grow. It's going to get back to growth, but it's going to be growing along a lower trajectory.
Mr. Macklem, in your most recent monetary policy report, I'm going to quote a section there. It says, weak growth is likely in the second half of 2025. After contracting in the second quarter, GDP growth is estimated to be about 0.75% on average for the second half of the year. So when we look at it on a year-to-date basis, is it fair to say that performance is basically neutral for our economy? But of course, the Prime Minister is promising Canadians that he's going to be building the economy at unimaginable speeds not seen since the Second World War. So I did a bit of research, and it looks like Canada's GDP growth following the years of the Second World War were between 6 and 7%. So based on your forecasts, when do you expect that we would achieve that 6 to 7% GDP growth?
Our forecast goes out about 2 to 3 years, and we don't achieve that. We've got, I think, 1.2, 1.1, and 1.6 in 2027.
And what do you think the economy would need to achieve that 6 and 7% GDP growth?
Well, if we want much higher, growth in the economy, we're going to need much higher productivity growth.
Okay. So when I read the news, I see that auto manufacturers have relocated investment to the U.S., some big names recently. Housing starts in Toronto specifically are at 30-year low. Bottling companies are also moving operations to the U.S. And, of course, small businesses have been heavily impacted because of the U.S. tariffs. Given that, do you believe that our economy is growing at unimaginable speeds, like the Prime Minister has mentioned?
At a what speed?
Unimaginable.
Unimaginable. I'm not really going to put it on.
Decades.
I mean, you can decide on the adjective. I mean, our forecast is 1.1, 1.2, 1.6.
So, in simple terms, for Canadians watching, that means that our economy is not growing very fast.
No.
Is that fair to say?
No, our economy is not growing very fast. It's been hit with a major structural shock. As you indicated, growth in the second quarter was negative. Economy contracted 1.6%. That was largely as a result of a big drop in exports to the United States. We think growth in the second half of the year, which, we're in November now, so a lot of that's already happened, but we don't have all the data yet. We think it's going to be pretty modest, 0.5 for Q3, 1% for Q4. And that's really because, to get back to Mr. Garon's question, consumption growth holding up, that's supporting growth, but exports and business investment remain weak. As you get into next year, we think there'll be some recovery in exports and business investment, so growth picks up. But yes, I mean, even 2027, 1.6% growth is not particularly strong.
And so you did touch on my next question a little bit. So your report mentions the GDP downgrade reflects lost capacity in a productivity crisis, not a surge of growth. When I think of lost productivity, that's not something that is easily restored, of course, because oftentimes when I think of a business that's heavily or capital intensive, once they've moved operations to another country, very unlikely that they will actually return, predominantly in manufacturing. So how does the lost capacity and productivity crisis impact the overall growth of the economy?
Well, really, my point in highlighting that this isn't a typical cyclical, it's not a typical business cycle, it's a structural adjustment. Part of the message there is that it's going to take longer than normal because rather than sort of demand coming back and businesses have found unused capacity, they now put that, they bring workers back to work, they increase production, and everything bounces back. This, in a structural adjustment, sectors need to pivot. They need to invest in new things. They're going to be doing less of some things. They need to be doing more of other things. And that is going to take time. So that's an important reason why the pickup in the economy is relatively gradual.
Thank you, Ms. Kobina. That concludes your time.
We introduced a budget to invest in Canadians. And we're doing this because of the storm we're in. We're investing $1 trillion to Do you think that's going to improve productivity and the standard of living for Canadians over the next few years?
Well, actually, the Senior Deputy Governor touched on this. When I look, I haven't read every page on the budget, but I certainly have looked at it. And the way I would put it is, I think we would largely share the diagnosis of the issues that the budget identifies. We've had weak business investment in this country for many years. The impact of tariffs, and particularly the impact of the unpredictability of U.S. policy, the upcoming review of CUSMA, those things are all weighing on investment, so investment's even weaker. This country needs more investment to improve productivity, open new markets, grow our internal market, and that involves both public investment, but also importantly, catalyzing private investment. We need to do a better job of attracting. We need to keep more of the capital. We need more investment by Canadian businesses in Canada, and we need to do a better job of attracting foreign capital. Now, so look, I think we see the same diagnostic. There are a number of measures in the budget, on the tax side, on the spending side. It's not really up to us to opine on the specific measures in the budget. I will say fiscal policy can do some important things that monetary policy can't do. Fiscal policy can target specific sectors in a way monetary policy can't. We have a number of sectors that have been very hard hit. Fiscal policy can support them directly, and fiscal policy can use the tax system and the spending system to spur investment. I think as what's going to be important in sort of moving forward is the quality of those investments, the quality of that spending, and the execution, timely execution, sound execution. That's not the responsibility of the Bank of Canada, but it is the responsibility of parliamentarians.
The standard of living of Canadians is what's at stake in the productivity crisis that was a break glass emergency even before the tariff war began. What are some of the things that we need to do something about it? Would repeal of excessive regulation be on the list of things that must be done to solve the productivity crisis?
Yeah, actually, I'm just going to clarify one thing I said and ask Senior Deputy to respond, since she's been leading the charge on productivity. Just to be clear on what I said about the standard of living, I didn't say that the standard of living is going to be ever lower. The standard of living, the economy is going to get back to growth. Our standard of living is going to the standard of living in Canadians is going to improve. But without tariffs, it was up here. Unfortunately, we're now on a lower path. And in the monetary policy report, our estimate is that path is about 1.5% lower. That's material. But let me ask the Senior Deputy Governor to talk about some of the things we could do to bend that lower curve back up to the higher.
Okay, because it was the Deputy Governor's concern and called it a break glass emergency before the tariff war began. Yeah. Go ahead.
Yeah. So in terms of what could we do, the point that you made is a good one. We could look at our regulatory environment. You want to be careful when you remove regulations. Usually they're there for a reason, but certainly they can always be reviewed and made efficient. I think if I was going to focus on regulation in Canada, one of the things I think we could do is look at where regulations differ across provinces for unclear reasons. So certainly standardizing regulation, making it easier to comply with the regulation, that would be one step. Steps to encourage investment, as the Governor mentioned earlier, whether those are in tax rules or just generally making the country more investable.
In the report that you had delivered, you did single out, actually you spoke about energy and aerospace were two industries you mentioned that are high productivity industries And oil and gas is one where we've seen a flight of capital and a lack of investment, a lack of pipeline capacity. Would building pipelines add to the productivity of our economy by enabling us to have the means to transmit that resource?
Investments that get our resources to market in general will add to productivity.
Okay, pipelines, ports, even other transportation infrastructure.
Yes.
Okay, so the government has as much as admitted that their regulatory environment is what is preventing these things from being built. That was why they brought in C5 to get over their own regulations that they brought in. So regulations, is that maybe at the core of why we cannot attract investment to high productivity industries like the oil and gas industry?
I think it's a factor.
Okay, thank you. On interest rates, Governor, you said CPI at 2.4%, core inflation at 3%. These numbers are getting into the higher end of your bound, and yet the bank has dropped interest rates. So if you're at the higher end of the bound but dropping interest rates, is that out of concern for the productivity concerns and the economic prospects rather than? Well, I'll let you.
Well, you're right. I mean, our target is for total CPI inflation. Total CPI inflation has been pretty close to 2. It did go up a bit in September to 2.4. But you're right. Our preferred measures of core are about 3. When we look at a broad range of inflation indicators, we think sort of underlying inflation is about 2.5. So yes, that is a bit of a concern. Our concern level, though, has been coming down. If you look at 3-month rates of core inflation, so a little more timely than looking at the year over year, what you see is in the first quarter they were running about 3.5. They're now under 3. So some of that upward pressure we saw on underlying inflation is dissipating. We do need to see it come down further, and that is built into our forecast that we published. So, if that doesn't happen, if instead of core inflation, we have core inflation kind of coming down to total around 2, but if inflation actually was to move up to 3% where our core is, we would be off our forecast. That would get our attention. That's the sort of thing we would respond to.
Governor, I'm going to have to end it here. Thank you.
Obviously, Governor, your outlook that was recently done doesn't take into account the federal budget and all the fiscal measures that are contained within the 495-ish pages, which I understand you might not have had a chance to fully absorb yet. But can you just confirm that it couldn't possibly have taken those things into consideration?
No, it does not take into consideration the new information in the budget. It does take into consideration things that were announced both at the federal and the provincial level before the budget. So some measures were already announced, but no, it doesn't take those into account. We will be reading the budget very carefully, and we will build in those fiscal plans into our next forecast, which will come out in January.
Thank you. So there's a quote from the budget I'd like to read. It says, "The most immediate way to jumpstart productivity growth is to address structural impediments and increase investment in machinery, equipment, innovation, and infrastructure." Would you generally agree with that diagnosis?
Yes.
Okay, great. So, and Governor, you had said earlier that obviously tax measures can help incentivize investment. There's a number of those in the budget. There's a whole section on what's called the productivity super deduction, which is an interesting term, but it contains a number of immediate expensing and accelerated capital cost allowance. So accelerated depreciation, machinery and equipment, for example, or the SHRED program, which is our tax credits for offsetting the cost of R&D. So again, supporting innovation. So do you think those things would help to increase investment and encourage businesses to take risks? Governor?
I mean, we're not gonna comment on specific tax provisions, but look, generally, yes. If you lower the costs of investment, you would expect to see more investment. And as I said, we have a pretty similar diagnosis, and I think the specific measures are really in the hands of elected governments, as they should be.
You've made a number of warnings over the last few years. So I think about, you warned about inflation, you warned about immigration, you warned about productivity, a very keynote speech, but you also made a warning in the spring about financial speculators purchasing government debt, about 40% if I recall correctly. And I guess the question I have is, in a world where we are very interconnected and the possibility exists of a sovereign debt issue somewhere else in the world, maybe not in Canada, are we not more exposed than we would be because we have 40% of, we'll call them hedge funds, purchasing our debt, which rely on this kind of liquidity and repo market to make the system work? And I think that was the conclusion of the report, that that's a rising risk. Is that fair?
Yes, it is a vulnerability which we've highlighted. It's certainly not unique to Canada. One thing you have seen, actually in most major economies, is there's been generally a rise in sovereign debts globally. There's also been a shift in the investor base. And as you mentioned, hedge funds have come in to the government debt market in a bigger way. And look, to some extent, that's welcome. Governments need investors. They've been an important new investor class. But what is concerning about it is they invest with a lot of leverage. So what they do effectively is they use these arbitrage strategies that have fairly low returns. To juice those returns, they borrow a lot to increase the return. And
so I want to jump in right there because I have very limited time. If something happens and those investors leave the market, what would happen to bond yields, government bond yields in Canada?
As you suggest, if that funding was disturbed, a lot of it is very short term. If that funding was disturbed, they pulled back sharply. Yes, that would cause a disruption in government bond markets. That is very core to the financial system. That could certainly spill over.
So that would be
issues.
Increased bond yields, correct?
Yes.
Potentially. So is it prudent for a government, knowing that this risk exists, to borrow record amounts of debt to go to the bond markets year after year, knowing that this risk is rising?
Look, I mean, as I said, this shift in the investor base is something you're seeing in all countries. You can. I'll let you decide.
I'll just ask another question and put a different way. If a government borrowed less money in the bond markets, would that be less risk to the government? Okay. I also want to ask about term structure. We're told the government's making generational long-term investments. The term structure of government debt is some of the lowest in the G7. Let's set aside the US. Mexico is an 18 average year. Heck, the government of Ontario is 12. The federal government's 6.9 years. Shouldn't they be actually matching borrowing with their investments if that's actually what they're doing?
Okay, well, now you're really getting into some pretty complicated. So debt strategy. So there's a few different things. So obviously, on average, at the shorter end, it's less costly. So you want some at the shorter end. The longer end is more stable, so you want some at the longer end. The other thing is,
but I guess I'm just asking, like, we have a low term structure. Like, shouldn't the government be borrowing more long term?
I mean, the government determines the term structure that balances these various things. We are the agent for the government.
I understand you won't want to answer. That's okay. I have one final question. I understand the bank may be close to not losing money anymore, but do you wish you still had some gold reserves to offset those losses? Because we do not have any gold reserves anymore as of 2016. You can blame a predecessor. You weren't there. So do you wish you still had the gold?
We
10
hold
seconds
our
or less, please.
we hold
Governor.
our reserves in interest-bearing assets, high quality.
It would be
US,
worth a
Euro.
lot, though, today, though.
Accountant speculated.
Well, I mean, we're one of the only central banks that have zero reserves now.
Okay, thank you. That concludes this.
You've mentioned the importance of having diversified trade partners. I was wondering what are some steps that we could take to ensure that we do have more diverse trading partners?
Well, you're a little bit out of our mandate, but I think it's the steps that ultimately it's companies that have to take those steps. They have to find new markets. That sometimes requires them to shift their products, their services. Developing trade relationships takes some time. It takes some investment both from the government and from these companies. So, it's a little bit out of our wheelhouse, but I would say that the steps in general, again, the steps that the government is taking and that we see companies taking, when we talk to companies, they do tell us they're taking steps to diversify their trade partners, but as the governor said earlier, it takes some time and it takes some cost.
Mm-hmm.
So.
Thanks. It seems like there has been some progress in diversifying the trade partners, so I can agree that is important. So just touching on attracting private investment into our country, do you have any perhaps suggestions on ways which we could foster investment into Canada?
A couple things. We've talked about regulatory approvals. Certainly, I spend a certain amount of time outside of the country talking to global investors, and one thing you hear a lot is that people look at Canada and they see a lot of very good things. Abundant natural resources, very well-educated workforce, rule of law, a diverse workforce, high labor force participation rates. But one of the things we do hear repeatedly is regulatory approvals there are too many levels and it takes too long. And I can't afford to tie up my capital waiting for an uncertain outcome. I think the more we can do, as the senior deputy governor said, look, those regulations, they're there for good reasons, but the more we can harmonize across provinces, get the federal government, the provincial government working better together, reduce the uncertainty, speed those up, that will make us more attractive to foreign capital. I think some of the other things we've talked about. We need to be able to get our resources to markets. That's transportation, it's pipelines, it's ports. Foreign investment will come if they see the return, and so we've got to look at investments that will make that more attractive. We need to make Canada more investable. That's what's going to attract more investment.
You have a currency management program including buying foreign currencies at the bank. Right now you have about $71+ billion of U.S. currency on your balance sheet, and that's a record high. Is that correct?
It's roughly right. I don't have the actual number in front of me, but
and
yes,
in January,
so just to be clear, those assets in our exchange fund account, they belong to the government of Canada. We manage those on their behalf.
Good, thank you. And as managing them, in January of 2025, you had $63 billion. So you've gone significantly up as far as your holdings of U.S. dollars. When you purchase U.S. dollars, what effect does it have on the Canadian dollar, U.S. dollar exchange rate?
It doesn't really have any effect. We run a match book, so the government typically issues a bond to fund the purchases of the U.S.
And yet,
so it doesn't really have any effect on the. To be honest, you have to realize the exchange market is a vast, very liquid market. These transactions are not of a scale that would impact it.
So correlation, though, and I know correlation and causation are two different things, but every time the Bank of Canada reduces its holdings of U.S. dollars, the exchange rate changes and goes down. And this is just coincidental?
Our management of the exchange fund account we have not intervened in the foreign exchange markets since I believe 1998. Okay. So,
and yet,
I mean, these are funds that are held.
Yeah,
in the case of an emergency, but they have not been used.
Yeah, but it's at a higher rate now, a higher level now than it has been in the past.
We've increased it kind of in line with the global economies have been growing. Our economy's been growing. It's been growing
10% over the last 9 months. Okay, so
that's a good thing. You want to have some emergency funds.
Thank you. The Steve Mirren, who was appointed to be on the Fed, he makes the statement that countries like Canada manipulate their exchange rates in order to keep the U.S. dollar down, in order to increase manufacturing in their home, and he calls it dollar manipulation. Would you say the Bank of Canada is involved in any kind of dollar manipulation?
Absolutely not. We have not intervened in our exchange market since 1998. We only intervened in 1998 because there was extreme pressure on our currency. We were stabilizing it. We believe in a free-floating exchange rate. Canada actually has been a model around the world for a long time. We're big believers in flexible exchange rates. We think they're broadly a stabilizer.
Okay. So right now, the Bank of Canada rate is 2.25%, and the Fed rate is 3.75 to 4%. How often is that differential in our history? How often is that differential that wide?
The differential is unusually wide at the moment, and that's because the performance of our economies is unusually wide at the moment.
You're saying the performance of our economy is quite subpar at this point?
It's certainly a lot weaker than the U.S. economy, yes.
Okay. And that has no effect, you think, on the actual exchange rate?
Yes, it has some. It certainly has some effect on the exchange rate. I don't think. I mean, the Canadian dollar actually has been pretty stable vis-a-vis the U.S. dollar. There's more than one thing going on. Yes. Look, Canadian rates below the U.S. rates will tend to weaken the Canadian dollar, and actually that's partly how monetary policy works. That's partly.
Thank you. Exactly.
That makes monetary policy more stimulating.
So the point I'm making is by having an interest rate.
It's not the dominant thing.
150 plus basis points below the U.S. We are actually creating less of a market for for buyers of Canadian debt to come into the Canadian market, but and let's accept that the U.S. market is the most liquid market, and so more buyers of debt would go to the U.S. market. Correct?
I'm not sure I'm following. The way we think about it is.
So let me rephrase it then, Mr.
You have about 20 seconds left.
Let me rephrase it then.
20 seconds left.
If we're 150 basis points plus behind the U.S. as far as our interest rates we're offering to bondholders, and the U.S. is a more attractive by security, do you think those bondholders would go elsewhere to the U.S.?
And that's partly reflected. The exchange rate adjusts to equalize that. Yes.
Thank you.
Thank you. Thank you.
We need to trade with all the countries we can diversify into. We don't just have to pivot from the United States and increase trade in Asia or China. We need a lot of markets for our agricultural commodities. Is there anything in the fiscal measures that the bank controls other than interest rates that would help in that area?
Back to the point we made earlier, the single biggest thing we can do to facilitate investment is to keep inflation under control.
Okay. And then getting back to Budget 2025 that was introduced yesterday, we've seen large investments in community infrastructure, in housing, and in industries. So a region like mine, Atlantic Canada, that has a seasonal economy, those types of investments coupled with a lower interest rate, how does that help the productivity in Atlantic Canada?
Well, I mean, it's a tough question. I think people want houses. And housing affordability is a big issue in this country. We've had a housing affordability problem at very low interest rates. We've had a housing affordability problem at high interest rates. So I don't think we're going to solve this with interest rates. we're going to solve, if you want houses to be more affordable, we need to build more houses and we need to lower the cost of building houses. And this isn't something that's going to get fixed quickly because, we've had a buildup over many years. It's going to take some time to get out of that hole. But I will say that we are pleased to see that governments at all levels, and it is very much at all levels, federal, provincial, and importantly municipal, they are working together better than they have in the past. If these programs are going to work, you're going to have to see even more cooperation at all levels of government.
It's also, I'd see what to add to that. I mean, it is hard to find a direct impact to housing, but employers need their employees to have houses where the jobs are. So having affordable housing in large cities like Vancouver and Toronto will help attract employees at a reasonable wage so that companies can find the workers they need to grow their business and stuff. So housing is a pretty important contributor to attracting and retaining employees.
And I think our government
You have
identifies.
about 10 seconds left, Mr. McDonald.
No, okay. I think our government identifies that if housing supply is increased, housing costs are going to come down in the long term.
Great. Thank you very much, Mr. McDonald. We will continue with Mr. Halan for 5 minutes. Thank you.
Governor, today we see young Canadians, and we talk to a lot of them. They're losing a lot of hope. Mr. Rogers had mentioned about like owning a home for someone young, unless they have the bank of mom and dad, is basically impossible. A lot of people say they've given up on the dream of home ownership. Some people, I remember the days when 25 years you could pay off the mortgage. Now sometimes it takes that long to save up for a down payment for young people. And Governor, you talked about that it's not just about lowering the interest rate, it's about the cost of a home and the supply itself. And I think those also they go hand in hand, and we see what the government's own housing agency is saying, that housing starts are going down this year and they're going to be worse next year. And for young people, I think it's almost impossible for them to get by, let alone what we're seeing with food price inflation as well. My question is that we see that in this new budget, there's an industrial carbon tax that's going to increase. Are those some of the inputs from that? Because it goes into the steel that goes into a home, it goes into the concrete that goes into a home, and it increases the costs. Would you say that as this industrial carbon tax increases, it could impact the cost of a house?
I don't think we have any work on that. I mean, the industrial carbon tax is largely, so it's imposed on very large emitters, and most of what they're producing is exported. So it's not having much of an impact on prices here in Canada. Our view is it's small. I don't have an estimate. You'd have to get very detailed, almost industry level data to chart through, because it's very indirect. But it's very different than the consumer carbon tax, which is applied directly to consumer goods. I mean, that has been removed. We saw the impact that had. It dropped prices, the price level by 0.6. It's taken 0.6 off inflation for 1 year.
Okay.
The industrial carbon tax is very different. It's a small number of large emitters, and most of what they produce is exported.
Right. But with regards to, let's go back to housing. With regards to that, what would it take for young Canadians to have hope again in order to even get a house?
If you want to focus on housing, I don't think the place to start would be the industrial carbon tax.
Well, I mean,
I think it would be municipal development charges.
Right.
It would be, we've talked a lot about productivity. The productivity in building a house has been going steadily down. The time to completion of housing, the graph looks like that. There hasn't been a lot of change in how a house is built. We need to look at things like new modular construction. We've got to look at ways of, we need a lot of houses. How are we going to build those efficiently, quickly, get the cost down, and make them more affordable? That's what's going to make housing more affordable.
Right, but for most young Canadians, I don't think we hear a lot about the modular and those. I don't think a lot of young people want to be stuck in container houses. People want to start families.
Look, I'm no expert on this, but I did go look at a plant, like a plant that is making these. They're not trailer homes. They're pretty nice houses.
Yeah,
I mean, yes, they're going to look similar, but if you want to build a whole new community rapidly, they're not going to be for everybody, but I think there'd be a lot of people pretty happy to have one.
Yeah, and obviously, like with what you said, with the supply needs to go up in order for us to have more affordability. But I think that it still is a big barrier for young Canadians who can't save up for even a down payment on a house. I mean, most people can't even imagine leaving their parents' basements today. They're doing all the right things. They're going through school. They're trying to work as hard as they can. Youth unemployment. I believe the youth employment rate is one of the lowest it's been, and I believe it was 25 years or something like that. Maybe what I'm trying to say is that you talk to a lot of Canadians. You guys do a lot of, research with young Canadians and other people. What is it going to take for this situation to change, for people to be able to afford things in Canada again?
Well, maybe the senior deputy governor can add, but look, I'll just say, look, I share all those concerns. I think they're real. Employment growth is weak right now. That particularly affects youth, because they're the ones that are coming into the labor market. If you have a job, there haven't been a lot of layoffs except in certain sectors, but hiring is weak. So it's taking young people coming into the labor market longer to find a job. That's not helping. I don't know, do you want to?
No, sorry, we'll have to cut it off there.
Okay.
We're out of time for this round.
Okay, great. So last time I got cut off, I'm going to continue on the same path on productivity, but I want to ask a series of short answer questions and see if I can just get you to say yes or no. I know it's always challenging when politicians do this, but I'm doing it in good faith. I'm not trying to wedge you or anything. Just want to ask you, so from a productivity enhancement perspective in Canada, generally speaking, would a more competitive marginal effective tax rate increase productivity or tend to increase investment?
Yes.
Okay. And would greater in tax incentives for investing in machinery and equipment generally increase productivity and investment?
If they attract investment.
Right. So what about R&D tax incentives?
Again, if they generate more R&D, then they'll be effective.
What about investment tax credits for clean technology?
Look, I think,
I'm just
I think we
asking.
get the picture. Look,
Yeah.
I mean, what I would say is, look, I think we all know the answer to these questions. I think the issue for you is, these things have got to be done in a smart way. They've got to be done so that they're effective. They're effective use of tax dollars. That they're done in a way that maximizes the productivity benefit, and that they can work in scale to have a macro impact.
Yeah,
on a
great.
timely basis. I mean, that's what you need to focus on. I think we know the answer to. These things are pointing in the right direction, but it's going to come down to execution.
Good. So appreciate that. AI adoption, someone else asked you about that. AI adoption certainly, I think, has productivity gain potential at the very least. Incentivizing that through investments and helping our small businesses and all size businesses to actually start to look at how they can adopt that obviously would have some productivity gain potential as well.
Yes.
Right? Okay. And then open banking. So the budget finally says we're moving forward with open banking. Obviously, you mentioned competition before as being important for productivity gains as well. Can you speak to how the open banking framework would increase productivity in the financial services industry?
Well, you basically named it. Open banking is designed to improve competition So that's the channel through which we would expect it to improve productivity. And banking is a network sector. It's a sector that affects the productivity of other sectors. So if we can get banking to be more productive, more competitive, it should have spillover effects to the broader economy.
And from a fiscal anchor perspective, our budget has moved to a debt to GDP, a deficit to GDP ratio. Would you say that's fairly normal as a fiscal anchor for other G7 countries?
I actually haven't gone through the fiscal anchors in the budget in any detail. I mean, I think fiscal anchors are a good thing. If they're going to be credible, you got to stick to them over time. That's what I would say.
Great. And the capital budgeting framework, generally speaking, the government's focus on capital formation is certainly going to stimulate growth and productivity as well, or at least make that.
If it's done smartly.
Okay. So it's all about being smart and execution, excellence, I guess. Execution excellence. Okay, great.
And I'm not being. It's going to be hard. These are big things. It's going to take smart execution. It's going to be a lot of work.
Agreed. Yeah, and I think we're up for that work. So thank you very much.
Thank you, Mr. Turnbull. Since there was a little bit of time left there, I'm going to use the chair's prerogative just to ask a follow-up question on Mr. Lefebvre's question on productivity. You mentioned that the U.S. is really the country that has achieved greater productivity, in Canada and peer countries are lagging behind. Could you just briefly comment on what those differences are
in productivity growth
between Canada and the U.S.?
Well, I mean, in any one year, I don't have the whole time series in front of me, but certainly, I mean, U.S. productivity growth. So if you go back in time, so both Canada and the United States had a pretty good pickup in productivity growth in the second half of the 1990s, and the difference really is that in Canada it kind of petered out in the early 2000s, and it's been pretty weak ever since. In the U.S., it just kept going, and when in any one year, that doesn't make a huge difference. But when you accumulate a significant difference in productivity growth each year over 20 years, you get the kinds of numbers I think Mr. Hallahan mentioned at the beginning, where, the income, the average income in the United States is well above the average income in Canada, and that is productivity growth.
Great. Thank you very much for that.
To go on a different approach here, your balance sheet is still from post-pandemic times. You've still got about 176 billion of Government of Canada bonds on your balance sheet, but it looks like it's going up. Like your balance sheet does seem like it's increasing lately. And your losses continue on a yearly basis. Your negative equity about 9.9 billion now, and you've lost $9 billion only on the transactions. If you mark that to market, how much are the actual book losses that we have on the Bank of Canada balance sheet?
I don't have that number. We can.
So 9.9 billion is your negative equity at this point in time.
Yes.
Okay.
Yeah.
So that's.
But just to come back to other points you made. We are not in a loss position anymore. So we are at positive earnings as of about a month ago, and we'll end this year in a positive position. So we're starting to contribute back to that equity. I don't think it's correct to say that our balance sheet is increasing. It's still declining. We have said that we would get to a level that we would stay at probably sometime around that later this year of reserve balances. I don't know if you're looking in total at the balance sheet or in particular at reserve balances, but either way, I don't think.
Yeah, I was looking at your holdings of Canadian government bonds.
I mean, the big picture is we've been shrinking our balance sheet for
I see
the
that.
last few years.
I see that.
We've now got it back to about the steady state where it needs to be,
Okay.
and so we are now transitioning back to our normal operating procedure.
So 9.9 billion will be a loss that will appear on the government's corporate. Crown
we're
corporations.
ultimately consolidated with the government, as the Senior Deputy Governor said.
Okay.
We're beginning, our revenue now is bigger than our expenses, so we are starting to contribute to building that back up.
So revenue bigger than expenses means that your investments are earning more interest than you're paying.
Yeah, we obviously have some expenses to run the Bank of Canada.
Okay. The question some people would have is if your debt management strategy of keeping interest rates low has an effect on your losses in that respect, and if that weighs on your decision somewhat, in addition to the other issues.
We don't run monetary policy to maximize the profitability of the Bank of Canada. We run monetary policy to keep inflation close to 2%.
And inflation would include some of the losses, some of the heavy debts that the government is incurring on Canadians.
Inflation is the year-over-year change in the consumer price index.
I understand what the inflation is, but would you say that annual deficits and mounting debts contribute to inflation?
Well, I'm not sure I really understand the question. I mean, inflation's 2.4%.
Do annual deficits and mounting debts contribute to inflation?
Depends on the situation the economy's in.
Okay, thank you.
If the economy's overheated and the government runs a big deficit, yes, it's going to.
Is the economy overheated?
No, economy's weak.
Thank you. I'll let that go. Thank you very much.
If you were to give advice to a young Canadian who's looking to save in the current job market, is there any advice you could give to somebody who's looking at the long term, maybe wants to buy a house down the line?
You know, I'm going to come back to the previous answer to Mr. Hallen, and he was asking how, what are the things we need to do to make housing affordable for young people. I think it's really important that we focus on supply. What has worried us over recent years is trying to solve that problem by making it easier for young people to borrow larger and larger amounts of money. So messing with mortgage rules or that sort of thing. That worries us. I mean, over the long run, that's going to saddle you with debt, and that'll mean you have less money to spend on other things. And in general, that's not good for the economy. If we have a lot of people who are saddled with a lot of debt, it can make you more vulnerable to economic shocks. So just as our country is more vulnerable when we have a lot of debt, so is a household more vulnerable when we have a lot of debt. So it's really important, I think, when we think about how to help young people get ahead, is that we're looking for ways to raise their incomes and to make housing affordable by increasing supply, but not finding ways to get you into more debt.
Thank you. And on a similar note, perhaps let's consider the case of a business owner who has assets but also high expenses, paying salaries. Given the current market, is there anything that you would advise for kind of in general a business owner to consider financially?
I mean, I think we don't really give advice to business owners. I mean, our job is really to help a business owner by keeping inflation low and stable. Mm-hmm. And when we can do that, they can make the best business decisions they can. Yeah.
Right. Thank you.